I actually think debt is older than money. And the reason I think that is because it's actually Lynn Alden's book, Broken Money, brought this to my attention really well, is the idea of a hunter-gatherer tribe, very small community. And just a random example, you might have two types of hunter, right? One is a fisherman, the other one hunts deers. And they want to exchange a hind leg for a fillet or whatever. And in your head, you can be like, mate, I gave you a fish last week. You owe me some deer. That, in a way, is a form of credit, right? It's an IOU, and it's just stored in your head. And the same can be said for when you go and get some milk off someone who has, managed to figure out how to milk their goat, or you get a piece of clothing from someone, or you name it. Very, very small community. And with that, it's possible to keep a ledger or a database in your own head for the debts you owe and the debts people owe you. And that in some ways solves the double coincidence of wants problem. How do you trade with each other when you can only swap physical items? And that's pretty cool. Glass beads, coins, through to today, what we have is the fiat currency system. And so in its modern form, debt is still the same thing. It's an IOU. So I'm going to give you something that you're going to pay me back at some point, and you're going to hold on to it for a period of time, and you're going to pay me for it whilst you've got it, and you're going to give it back to me at the end. And because we live in an environment of fiat currency and central banking, it's a very cozy relationship between the monetary policy makers in central banks and the political scientists sitting over in government. And basically, they pay for each other. They scratch each other's backs. And it's kind of dangerous, right? This was something I didn't touch on completely with the Gary Stevenson rant from before, which is basically inequality is a problem, absolutely. But why is it happening? Well, I think it's because of the money. It's because of the Cantillon effect. It's because of the fact that someone out there can print their own money. And the rich get richer in an environment where the person with the most assets, hard assets, we're not creating more goods, we're not creating more services, we're not creating a vast amount more housing, etc. Hard assets in an environment in which they just print more of the currency. What does this mean? So in the sense of debt, like everything around us is debt. And so if they're going to play the game, well, maybe play the game too. And to give you context for this rant, it's like, okay, I want to buy a house. All right, well, the housing market is highly leveraged. Everyone knows this, right? I can't remember the exact data. It was actually less than what I expected. From memory, in Australia, 50 or 60% of properties are leveraged. I thought it would be more than that. I don't know how the rest of the housing market is able to do it, certainly if you're entering the housing market without debt, especially when you look at the average salary, right? So average salary versus average house price, those two things are diverging, and it continues to be the case over time. Why is that? Well, I personally think it's because of the money printer, right? So with debt, so how does it actually make sense? Well, with a house purchase, I calculated around 6% completion cost. So that's the paying government stamp duty, that is paying any agents that you might have involved, paying for the transfer of the asset into your own name. So that's already a big chunk, right? 6%, okay. And the debt fees as well, right? You've got to pay the loan origination fees and whatever. But if you can fix a piece of debt for a period of time, and you know that the asset's going to increase in value because of the likelihood of more money printing, at what point is debt actually useful? Well, it's useful in my perspective because if I'm sitting on a portfolio of which, let's say it's 80% Bitcoin, and you're like, okay, well, I want to buy a family home. How do I do this? Well, if your Bitcoin has appreciated well, let's say you're sitting on a 4 or 5x on your Bitcoin, you could sell some down. So why not? Take 25% off the table, you pay the capital gains tax when that comes due, and you say, job done. Okay, now I've got a deposit for a house, and I still have a good long Bitcoin position to ride out the next bear market and hit the next high in 3-4 years' time. That kind of makes sense. You could also potentially use that Bitcoin position to pay the loan fees, so your debt, your interest servicing fees over that period of time. And maybe, just maybe, it's time to actually start looking at this more seriously. Like even with a 10% interest rate, if your house price continues to appreciate, that's not a bad thing, of course. If you can carry the debt, then you're able to actually keep the asset. And the point being is you don't have to sell all your Bitcoin to buy a house that then doesn't really do well financially. So you want to try and keep as much Bitcoin exposure as possible. I sold a family home in 2022 in favor of taking a bigger Bitcoin position and in favor of renting a nicer house in a nicer area. The reality of moving a young family around and renting has been much more stressful than I expected. And it's taking up a huge amount of mind space, of energy. It's like, God, where are we going to live? And in some ways, we've got too many choices. And that's a great place to be. Don't get me wrong. I'm not going to complain about that at all. But it's this sense of energy. If your energy is being consumed by one thing, then by definition, it can't be consumed elsewhere. And if you want to be creative, if you want to build a business, if you want to do a podcast, if you want to be a better dad, and your energy has been sucked out of those things to go elsewhere, well, maybe you're not making the right allocation. How do we use our time? That is one of the most important things that we can possibly figure out. And so, yeah, I'm like, right, maybe it's time to buy. Maybe I just need to take a big loan and get on with it. And some of my hesitation is around just like some of the numbers that are coming back. You're like, fuck, is that really how much I'd have to pay in interest every month for a house that I wouldn't even consider to be that incredible? It's just the going rate for a property in the area that I live in. And so it's a bit of a head fuck, to be honest. You're like, how does this actually make sense? I mean, last year I had the best investment year I've ever had, should in theory be as wealthy as I've ever been, but I still can't afford a house that I want. Like, what the hell's going on out there? And so I truly believe that maybe it's time to kind of take this debt thing more seriously. Oh, you can't be in debt. Well, maybe you can, but done in a strategic way and sensibly. And so I'm still trying to figure this out. But yes, go back to my use case. Okay, you sell down some of your Bitcoin gains, you now have a deposit, and then you can go and get some debt, whether it be a mortgage or private market loan, however you can figure that out, and go and buy a property and sit in it, for as long as you need to and for as long as you might want. And there's another angle to this which might also work, where here in Australia, there's something called the monochrome ETF, the Bitcoin ETF. You could actually, instead of selling that 20% of your Bitcoin position, you could move that Bitcoin into the ETF, and then you could, because it's been structured in such a way that you don't trigger capital gains by moving it out of your own custody into the ETF product, and also back out. So that's quite smart on their behalf. I don't exactly know how they've done it, but it's some kind of trust product. And using the ETF, you can get a loan against the ETF. So actually what you could do is you could take 20% of your Bitcoin stack, create an ETF position with it. You can then get a kind of 50% loan to value ratio. And I believe the interest rate's around 3-4%. And the reason it's so competitive is because this is now securities lending. And this is very, very common, right? People take loans against their Apple stock all the time. You could then have the cash to put down the deposit. My fear with this, though, for the real estate ultimately, is the margin call. And like, how do you get your head around that? So, okay, what if Bitcoin drops in half? Well, you've got to put in more Bitcoin to your ETF product, or you just say goodbye to the Bitcoin. Maybe you risk it. Maybe that's fine. Maybe it's just a case of Bitcoin is money and you've got to use it sometimes to get real stuff that you actually need. So yeah, I'm just trying to figure this out. Basically, it's the case that it's just not that easy to take debt against Bitcoin. And especially when it comes to real estate, because the real estate market it's interesting. It looks at the house as an asset, and they're willing to give you a loan, aka a mortgage, because that asset's on the chopping board. We think this asset's worth $2 million. We're willing to give you a 75% loan. If the asset came into our hands, we're confident we'll get our money out, even if the market's dropped, because we've only got 75% of the value. And your deposit might get wiped out if things go wrong, if you can't pay the servicing fees, which you can see happening all the time, right? People 2, 3, 4 years ago were taking debt, not even 5%. And now you're looking at 6, 7, 8% for a long-term mortgage. It's a different ballgame. What's so surprising, though, is the real estate market here in Australia, I don't really see it coming off that much. I was expecting to be well down from where it is. And it's because owners, I think, have been able to weather the storm pretty well. And they might put properties on the market for sale, haven't seen the money they wanted and just kept them. And so is it a case of biding your time and waiting for that to fully capitulate? I don't know. This particular phase of the solo rip, it's a bit of a jumble. Apologies for that. I'm sure there are people out there that are going through similar things where it's like, okay, how do I buy this real world asset? How do I not sell the fastest horse in the race? And how am I then able to carry the debt for as long as is necessary? it's hard to do, essentially. And so, yeah, I'm figuring that out. If anyone has any good suggestions, I'd love to hear from you. Do get in touch. Because, yeah, it would be so cool to see. I guess final point is there's a law in the US, the SARB 121 regulation, that basically ensured they couldn't put Bitcoin on their balance sheets, the big banks. That's now been altered, so they will be able to do it. So it's not far away, in my opinion, that you'll be able to custody Bitcoin with a commercial bank with a very, very long-term, high-integrity, too big to fail brand that a lot of people might be able to trust versus the startup stuff that's going on. I think it's a case of, on the one hand, Jake, just bide your time, don't take on any debt, don't take any risk, and just sit on your Bitcoin position, which is going to outpace everything. Figure out how to rent, versus maybe it's time to strap on the big boy pants and take on a loan, figure out how to carry the debt the whole time, and enter the property market in a serious way. We'll see.